Is it's April of 2011. There was a show then, Game of Thrones, Winter is Coming was the first episode. And that's where we are right now with the screaming success in days of Blue Eye Samurai on Netflix. I'm watching it. I can't say enough about the shocking beauty of it. It is overwhelming how it is game-changing for streaming. Geetha Ranganathan knows this. She's U.S. media analyst at Bloomberg Intelligence. And I would suggest Disney knows this as well. Geetha, boy, does Disney need a Blue Eye Samurai.
They certainly do. And that's one thing, Tom, that Bob Iger really emphasized yesterday. He said he is looking to reinvent the studio. Those are the words he used, and he really emphasized quality over quantity. So you spoke about how spectacular Blue-Eyed Samurai is. That's exactly what Disney is going to go after. They talked about, the studio having some kind of franchise fatigue, too many TV series created for the streaming service. So they're really kind of streaming down or cutting down, I would say, paring down on a lot of the content costs. Lisa was talking about where those savings are going to come from. A lot of that is them just really cutting down on content costs. So they took down content costs from $30 billion to $27 billion for fiscal 2023. They're taking that down further to $25 billion. And that is where you get that big free cash flow number for them as well. $8 billion is what they're projecting for 2024, a 60% increase from this year.
Now, I get it, it's anime, it's animation, but the basic idea is Blue-Eyed Samurai is as non-diversity as we could get in 2023. Is Disney moving on from the tone and temperament of the last 3 or 4 years? Is Iger going back to something or new to something different?
I think it's a combination of everything, Tom, because he needs to go back to the drawing board. He knows that there hasn't really been a new Star Wars or a Lucasfilm movie since 2019. Obviously, the Marvels is in its next kind of iteration, if you will. So there's a lot of things that he needs to do. But the biggest thing, I think, for them, for the Disney studio, and this has kind of been a little bit shocking, and you bring up animation, and that's a really good point, because a lot of their recent animated movies have actually not performed as well as, some of us would have expected. And Pixar has kind of been, has had kind of this string of misfires, if you will. And the studio that is really kind of giving them a run for the money is Universal with Illumination. We had, you have Super Mario, you had Minions, all of these animated movies from Universal doing really, really well. So Disney obviously going back to the drawing board and kind of doing a lot of rethinking and as Bob Iger said, reinventing the whole franchise.
If Bob Iger was the movie, is this Nightmare the sequel?
That's a great...
It's not going well, Geetha, is it?
Well, I mean, he tried his best. And if there is, any person for the job, any person who can actually fix and rebuild Disney, I think it definitely is Bob Iger. And he, kind of delivered signature Bob Iger kind of news yesterday. Lots of good news, lots of nuggets of, good, optimistic news for investors to kind of hang on to. Obviously, there is a lot of work that remains to be done. But we do know that there are some real growth drivers for Disney, whether it's the parks business. That is 70% of Disney's operating income, throwing out about $10 billion in operating profits and cash flow. So that definitely is a huge growth pillar for the company. And then, of course, is streaming and how they're kind of going to manage that whole business. We know that they're in the process of consolidating Hulu. The big question is how they're going to manage the ESPN transition and, whether that Disney bundle, the streaming bundle, really becomes the competitor, a true competitor to Netflix.
Is rebuilding a euphemism for shutting it down in terms of streamlining certain businesses and getting off selling the rest of it?
Yeah, so he seemed to actually walk back a little bit of, the linear TV commentary. I know we've talked a lot about ABC and some of the other networks kind of being up for sale. But he also did say that there is a huge cost opportunity when it comes to, those linear networks. And so they've actually, the Charter deal that they recently inked was kind of a catalyst for them shutting down a lot of, the smaller networks that they don't consider core. And I think that's what they're going to do. They are definitely going to streamline the business. You're absolutely right, Lisa. I'm not sure when or how the sale is necessarily going to happen, but Iger seemed to suggest that even if a sale doesn't happen right away, there are a lot of synergies and there are a lot of cost efficiencies that they can hopefully extract over the next few months.
Geetha, this one's a tough one to answer, but explore the question with us if you can. Tom mentioned who's buying. If they're selling, who's buying? Where do the buyers come from?
So it could be private equity. I mean, we know there has been interest from certain parties. Byron Allen was one who kind of made a bid for the ABC and some of the networks. Again, private equity would always is interested in, the TV assets because they do, yes, it is an industry that is in secular decline, but at the end of the day, it does throw out a lot of cash, and that is valuable. Again, it's a little bit of a wait and watch. There has been some chatter about whether the leagues would be interested in kind of going and getting a broadcast asset. I mean, broadcast assets like ABC don't come up for sale very often. So, maybe it is something that the league can potentially consider for reach.
Interesting. Geetha, appreciate the update. You're valuable. We appreciate your time. Geetha Ranganathan there of Bloomberg Intelligence. We'll catch up with Geetha again around the opening bell a little bit later this morning. Shares of Disney in a pre-market up there by a little more than 4%.